South Africa has avoided slipping into a technical recession by just the breadth of a hair. The fourth quarter gross domestic product figures showing the country's economy expanded by 0.1%. Let's bring in Newzroom Afrika's business editor, Xolani Mbanjwa, is here in studio to chat to us about these numbers. Xolani, and that was a close one.
It is a close one, and it's a big worry for such a huge economy, Michelle, that we are grappling with the dreaded R word of the technical recession. But be that as it may, we saw the contraction of 0.2% in the third quarter, and that was largely due to the 11.7% contraction in agriculture, right, which is a huge sector in the country. And of course, load shedding, higher stages of load shedding we saw in the third quarter led to the production, the output actually decreasing at that time. So this is quite good. There was a lot of speculation into whether we would miss the technical recession, but this is by a whisker. 0.1% is by a whisker, and it doesn't mean that we should not be worried. We should be very worried because with these numbers, our unemployment data, our unemployment numbers are not going to change anytime soon. I guess there is a silver lining. There is something good in these numbers. If you look at the actual GDP at $1.5 trillion in 2020, before, in the first quarter rather, of 2020, before the COVID-19 pandemic came in. This is the first time we have beaten those numbers at 1.58 trillion rands, which is just 8 billion rands better than 2020. That's because, I'm saying that because COVID-19 has been a normal feature in our lexicon and in trying to explain things since 2020, and the fact that in this fourth quarter of 2023 we have an economic output that is much better than 2020, it should speak volumes for everyone concerned.
Yeah, absolutely. I mean, effectively, Xolani, what these numbers tell us is that South Africans are getting poorer, right? Our GDP per capita is now lower than emerging market economies.
You are right, and if you look at the detail as well of what's happening with households, we know that they are highly indebted, we know the interest rates are high, but if you want to look at what's happening according to the GDP data, the household final consumption expenditure, which is everything that we spend money on in our households, be it concert tickets, be it going to the municipal pool, whatever we spend our money on, that has been going down, but it's up 0.2% in the last quarter of 2023. That should be a worry because those last 3 months, October, November, December, we are out on holiday, we are out visiting family, right. We are supposed to be spending more, so it should be looking better. But when you look at the contribution to the overall picture of GDP, household final consumption expenditure only contributing 0.1 of a percentage point to the total GDP. So when we are supposed to be spending money, having fun, and digging deeper into our pockets, we are not. That's because of the tough economic times. There are no
luxury expenditures in our budgets.
There aren't any. And I actually just looked at that we are spending money on the most essential items.
Food, fuel, education,
fuel, electricity, transport. That's where we're spending our money. And there's another way also of looking at it. Total gross fixed capital formation is just a clever way of telling us how much money is being spent on construction of roads, just how much money is in the market being spent in that quarter, and that decreased by 0.2%. They call it investments because you are building, you are constructing a building, you are constructing a road, you are refurbishing your house. So the money that was investing in all the things that we spend during that quarter, that also decreased. And that also talks to companies that are going to be going out making orders for whatever they use. That is a decrease 0.2%. Imports have also decreased. That's usually a sign of some tough times. You want imports to increase as much as exports, but them decreasing that much is also, Michelle, a sign of really an economy that is in a deep strain.
Yeah. I mean, what's the growth that we need for employment, Xolani, officially? And I feel like I have the number 5% in my mind.
Yes.
That is what we need to sort of ignite growth in our economy, to get those much-needed jobs for the millions of young people who are sitting at home without a job and have been for quite some time. And many of them are going to the polls in November.
And that is in May.
In May,
yes,
thank you.
Yeah. The figure that has always been talked about, the economy needs to grow by between 3% and 5% on an annual basis. When you look at the annual number for 2023, we started the year with forecasts of 1.1%, 1.6% from different forecasts locally and internationally. We are ending the year, 2023 is at 0.6% overall.
Sure.
That is not something that we could rave home about.
And the projection by the IMF for the coming year is far off of 3% or even 5%.
No, and it doesn't mean that in, for example, 2025, should we grow by 3% or even 5% in that year, we are going to see unemployment being dealt a huge blow. It needs to be sustainable growth over a period, and then you will see those investments coming in that is going to make a lot of people hire job and hire people for jobs, and entrepreneurs being encouraged that there is money to be made in South Africa, let's get into business. But when you're looking at the picture you're looking at today, we are not going to be getting at 2% initially. That's where we need to get for a very long time. And it is a big concern, because millions of South Africans do not have jobs. And without a growing economy, of course, we're not going to be creating the jobs needed. We are in deep trouble, aren't we? When investors take a look at a picture like this, Xolani, what do they see? So it's hard to say, but if an investor is looking at South Africa today, they're looking at South Africa with skepticism. Largely not only because of load shedding, and the low economic growth. You can make money as an investor in South Africa, but this year is particularly tricky because a lot of countries are going to the polls, and you'd rather hold on to your purses as an investor than invest in a country now that you don't even know what kind of a government is going to come after May, whether it's going to be a coalition government. So it's a myriad of things that they look at, and particularly hard for investors this year because of the issue, Michelle, of the polls. A lot of countries going for elections, so they would rather play it safe, for now. But just like we've seen with the logistics problems that at our ports with Transnet, just like we've seen where we haven't even exported the 13 billion US dollars of agricultural produce. We were not able to export all of it, as much as we could, because of the logistics problems. What are mining companies doing? They are going to our neighbors to actually take things out into the entire continent. So our neighboring countries are actually benefiting. They are the ones, because we have dithered. Yeah, absolutely. It's an incredibly important story, certainly our breaking news story this hour, and that is our GDP expanding by a whisker, as Xolani put it, 0.1%, and that's following a contraction of 0.2% in the previous quarter. And there's going to be plenty of discussion on this. In fact, within the hour, we'll get you more market reaction. Mbanjwa is our business editor. Thanks very much indeed.